So let's explain how alternative investments perform during economic downturns globally.
There's an inverse correlation between global downturns and alternative investment. When we have recession in the global space, the tendency for alternative investment to generate higher returns is significant. So you look at an alternative investment like real estate. If you're invested in properties and then there's inflation, over time, there might be need to review your rental income. If your tenants may need to pay you higher, the property will probably be revalued higher, you know. And then you are also having an hedge against your currency fluctuation. So if you have invested in gold, like I did say earlier, since COVID, since when we went out of COVID-19, you probably will be a better investor today. So alternative investment have paid off investors during global recession or during any form of global downturn over time.
Mm. Now, while you were speaking, you touched a bit on private equity. Now, with that, I would like to ask, how does valuation changes differ among private equity, hedge funds, and commodities, by first explaining each of this?
Okay, so you see, valuation is a major aspect of investment management, and there are many factors that go into valuation. You are looking at the nature of the investment, so it differs from each asset class. From private equity to commodities to any form of investment, valuation differs. And so you are looking at the strategy deployed in the investment, you are looking at the market dynamics, you are looking at the nature of the asset, So for private equity, there is always this valuation challenge around liquidity of that investment. How easy can it be exchanged for cash? Another challenge with the private equity investment is that because it is not a public company, there's limited financial data, that you would be able to access. And, it's going to be a choice whether you trust the information that the company, the startup, or the private company that is giving you that information, whether you can trust that data, because it will guide the valuation, the pricing of that business, and then we have issues around assumptions, assumptions that you are going to be making. Valuation requires assumptions, how regular is the cash flow expected, and then most times the niche, the area which that company that you're trying to invest in, that private company that you're trying to invest in operates, is also a challenge, because there might be few comparable or peers, a peer company with which you can benchmark the performance of that company, with, that's for private equity. But for commodities, the challenge may be around price volatility, the challenge may be around logistic costs, in valuing it, So each area has different valuation methods. It is what is now applicable at the point of taking your decision that will guide investment decisions. Yeah.
So the hedge funds, now perhaps people do not understand what that means. What does it really mean, and how can people access it?
So basically, hedge funds um, they are investment vehicles, that requires the firm pulling capital from different accredited or institutional investors, but with the capacity to invest in a variety of assets. You can have a general partner in an hedge fund who is your fund manager, and the investors are referred to as limited partners. The general partner manages the investment, while the limited partners provide the capital. But what stands hedge fund out is that is the capacity to deploy investment strategies, you know, uh, that outperforms market expectations. So your general partner will definitely have a capacity to take or adopt investment strategies that would enable you generate alpha returns. It might be using some instruments, it might be using leverages, it might be deploying some technology, some novel technology, but the capacity to generate significant returns for you is higher in that kind of arrangement. So that's basically a summary of what hedge funds is all about.
Now, we want to do private versus public companies. What do you what would be the place of due diligence when it comes to any of this sector? Because public is perhaps government owned and all of that, and there is structure and all of that, but what is the place of due diligence when I know I was speaking to a friend and he told me how the many lawyers he needed to employ to help him gather information about a particular company where he wants to do business with, and these lawyers do not know themselves. So now I guess in that aspect he's trying to actually do his own part of due diligence in order not to fall victim of either fraud or wrong investment. So in this instance, let's look at both ways. What is the place of due diligence in private sector and public?
Okay, so let me just correct um, something. So when we say public company, it's not that it is publicly or government related or publicly owned, but government related.
Okay.
The term public means that the company is, for the lack of a better word, is naked. The company is the financial and non-financial information about that company is available to the public. That's what makes it a public company, aside from the fact that the number of shareholders. So public companies most times are listed on a stock exchange. Not all public companies are listed, but public company is required to provide the public with its information. So the access. So if I'm interested in investing in Guarantee Trust Bank in Nigeria, for example, I can just go to the Nigerian Stock Exchange and I will have access to all of the information about the bank, the financial data, the non-financial data, because they are required to provide, to provide all of that information on a regular basis. So that's what makes it. I'm just trying to correct the
Thank you.
definition.
Yeah.
So that's what makes it a public company. However, for private company, it is not so. It is not so. The information availability in a private company is limited. They will only have, you know, they will only bother about management accounts, and the regulators like the SEC, like the financial reporting, regulators may not really be interested in what is going on there. So first, information availability is what will guide due diligence. Are you with me? So for in conducting due diligence for a public company, you only need to access that information via a stock exchange or any other market platform where that company is listed. You will have access to the information. So for private company, it is at the point of investing that you would now need to sign. Most of them will require you to sign a non-disclosure agreement before they disclose or give access to their data. So financials of public companies are also subject to high regulatory standards. So if they have to meet your IRS requirements, your company registration requirements, your SEC requirements, so they may have gone through a lot of rigors in auditing. The auditors would have audited their financial data, and then they would have need to meet with financial reporting standards, global or international financial reporting standards before they deploy or release those reports. But that does not apply. So due diligence for a public company is easier, while that for a private company it will require your engagement of professionals, lawyers and other financial experts to review the data, for enhanced decision making. And then you also have issues around control. It's easier for you to determine the beneficial owners of a public company because it's disclosed. And then it's disclosed, it's required by law that they disclose who owns what in those companies. But that doesn't apply to private companies. So due diligence, as a matter of fact, requires more enhanced action by investors in private equity space than in the public company affairs.
All right. Thank you so much, sir. All right. Do you have any final word, any word of advice for anyone seeking to get involved in alternative investment?
Personal due diligence is important, but a consultation of financial experts, it's important. It's even more important. Just like when one is ill, and you require medical attention, there's need to visit a medical doctor. The same way when there's need to carry out life-changing decisions concerning your money, you have to consult a financial expert that is qualified to give that decision. So that's very, very important. The investment decisions most times, are not something you just take with levity. It's as serious as your health. So financial health requires consultation um, by financial consultants who would guide. The final decision may lie with you in going ahead, but when considering investing in alternative investment assets, the best advice to seek is from a financial expert, who can give the right or near best decisions. Yeah.
Thank you so much, sir. It's been wonderful having you on the show, and we look forward to having you again. If that is okay by you.
It's all right. It's a pleasure.
Yes,
Thank
sir.
you.
And to you out there, thank you too for being part of the show. Remember, your financial decision is as good as your health. So you need to take it seriously by doing your due diligence before you venture into any. Until next time when I come your way again, please be safe and enjoy the rest of the day. Bye for now.